Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Tuesday, October 15th, 2013. I'm Bill Duryea with Follow the Bots. During Monday's session, S&P futures traded in a narrow range between 1690 and 1688. During the period where the market activity was limited to the high-frequency market maker algorithmic sequence, a buy-side bias developed and the S&P broke out above 1690, auctioned back up to Friday's high, went on to make a higher high, trading up to 1705. S&P futures made a modest pullback at or near the 1700 price level before auctioning back up to the high and closing Monday's session at the high. After hours, the buying interest continued and the S&P traded up to 1709. Just shy of the September 19th breakdown point at 1712. During the rally to the overnight high, the buying interest waned. The S&P pulled back modestly down to 1703 and attempted to retest the high. Once again, there was no buying interest, and price traded down to the minor support level that had developed late during Monday's session at or near 1700. At the open of Tuesday's session, selling pressure accompanied the retracement up to 1704, and the S&P sold down to 1695. During the pullback to 1695, the buying interest and the S&P auctioned back up to fill the gap at or near the overnight high at 1706. On the retracement back to the 1706 price level, selling pressure returned. The market gradually sold down from the high, but the trade sequence was once again limited to the market maker algorithm, a similar pattern that we observed during Monday's open. During the high-frequency market maker sequence, a sell-side bias developed, and the S&P traded down below the opening range low at 1696 and pulled back to the starting point of Monday's buy-side rally. The pullback to 1690 held support, and the S&P auctioned back up to the price level where the initiated selling had developed during the high-frequency market maker sequence. S&P futures traded back and retested the low and held support at the low. In the after-hours session, the market retested the low once again, trading down to 1691. The selling pressure ended during the pullback to 1691, and the S&P auctioned back up through the trading range, back up to retest the opening range high at 1708. For a detailed look at the market developments that occurred during Tuesday's session, we'll focus our analysis on the 5-tick range chart. Here we see the narrow execution sequence that developed overnight when the S&P traded up to 1709. Notice that when price broke down below the low and pulled back at or near Monday's close, during the retracement, the market encountered high-frequency initiated selling, which ultimately resulted in the S&P selling down to the opening range low at 1696. When the S&P auctioned back to retest the high at 1706, the order flow events indicated that the buying interest was waning. As the S&P pulled back, and traded in a very narrow range, there was selling pressure on the subsequent upticks. The sell-side bias eventually led to the S&P pulling back to 1690. On the pullback to 1690, the computerized sell programs ceased executing to the sell side. High frequency initiated buying entered, and the S&P traded back up to 1700. On the retracement back to where the breakdown had occurred out of the high frequency algo sequence, selling pressure returned, resulting in the S&P pulling back down to 1691. Coming into Wednesday's session, S&P futures has found support at 1690. Resistance is currently located up at the overnight high at 1709. The key resistance level is the September 19th breakdown point at 1712. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.